This is Declarations.
The best advice came from my grandfather, I think. He taught me many principles, such as the value of strong ethics, humility, among others, but the ones that he repeated the most were around the fact that there are no shortcuts to success. And those revolve around hard work, resilience, and the ability to listen. And from that, I do believe that resilience is the most important skill to succeed in life.
Hi, I'm Todd Rich, co-founder of Declaration Partners and head of our real estate investing business. Welcome back to the Declarations Podcast. The purpose of the Declarations Podcast is to engage in deep conversations with thought leaders in investing and investments, especially with those who provide an independent perspective. Our goal with the podcast is to explore the foundation behind the success of some of the world's best investors and to understand the source of their inspiration. Hopefully, by hearing their stories, we can all become better investors. We're excited to welcome today Marco Peschiera. Marco is the CEO of Grupo Romero Investment Office, or GRIO, as well as their new asset management arm called GRIO. Grupo Romero, based in Peru, is one of the largest family-owned conglomerates in Latin America. Their portfolio includes companies in a diversified set of sectors, including consumer, agriculture, energy, logistics, financial services, and more. Marco serves as the head of the family's investment arm, and in that capacity is working to deploy capital in Latin America and around the globe. Building on Marco's extensive private investment experience, which was honed at Carlyle and Citigroup, Marco's stated goal is to convert a family-owned conglomerate into a top-tier investment platform. Marco brings a wealth of investment experience and a global perspective. I'm proud to disclose that Marco and Grupo Romero are investors with us at Declaration, and I'm even more proud to call Marco a friend. Marco, bienvenido. Welcome to the podcast.
Hi, Todd. Thank you very much. It's a pleasure to be here.
Well, thanks for doing this. And as you know, I really like to start all of these conversations the same way. So Marco, here's the question. What is your declaration?
Okay, well, my declaration is to hire people that have the potential to be better than me and train them as they become part of my team. Give them the tools, experience, exposure to become better investors, and most important, teach them the power of being resilient through time. In my opinion, this is the most important skill to be successful. My aspiration is to create stepping stone for their lifelong careers as investors.
That must be great. I imagine all of your team who is likely listening right now must be really excited to hear that and even more excited to learn from you. Maybe let's go to your personal background. We'll ultimately get to investing and what you're doing at Grupo Romero, but maybe let's start much earlier. If I'm right, I think you grew up, maybe in a rural farm in Peru, and maybe that was before formal schooling. But what was that like? Take us back to that time.
Sure. I spent the first 8 years of my life living in a farm, actually. We call it hacienda. This is about 140 kilometers south of Lima. It's about 87 miles. And I remember it as a very joyful and simple life where I grew up horse riding, biking, surfing, and exposed to many adventures at that age. But even though I moved to Lima for proper schooling, I kept going there every summer until I was in my late teens, I believe.
Do you still go there? Do you still go out? I don't know if it's a family farm or a hacienda.
Yes, it's a family farm, and I still go there, actually. We still have it. Very relaxed. But I learned a lot of things about the farm and, the time I spent there. I learned about modesty, which is the opposite of hubris, as you know. And you don't need a lot of material stuff to enjoy life and be happy, but you do need to set up challenging goals for yourself and embark on a journey to try and achieve them as much as you can. For me, the important thing is to have your feet in the earth. I try to live my life through this philosophy.
Got it. And so modesty is a theme that comes up actually as we talk to it. It's so interesting to me, right? We talk to some of the world's, most well-known, most accomplished investors. And yet many of them say that humility and modesty is one of the things that has guided them throughout their success. It's fascinating. And you think that really results from your experience on the farm?
Absolutely. Modesty, a simple life, the feet on the earth. I mean, all those things I think are vital to the way you approach investments. You have to be very mindful of risk.
Well, let's talk about a little bit about that. So you had your feet on the earth, maybe even bare feet on the in the farm earth, up until you said, I guess, 8 years old. Then you moved into a more urban one, right? So you moved to Central Lima, and you started schooling. And I guess what there was like 10 million people in Lima. I mean, that must have been a very different experience.
Yeah, you're right. I mean, Lima is a very large city. Actually, I started learning English when I was about 8 years old at Markham School, the British school in Lima. I graduated from high school there. The transition, to be honest, was relatively smooth, given that I used to go back to Lima for doctor's appointments, dentists, all that stuff. And I also had many cousins and my grandparents in Lima. However, it did require certain personality adjustments, as it was a much easier life. And my new friends were a lot less naive than what I was at that age. You know what I mean? So that was an adjustment.
The city life seemed to take to you after that. I guess you did stay in Lima. You went to university there, but I think what you then went to get an MBA. I don't know if it was directly there, but then you went to the United States. Okay, so how did some campesino from Peru hear about Wharton and ultimately decide to move to the United States and get into the world of investments?
Well, I mean, that was a long, unexpected journey. So bear with me. In high school, I went to University of Lima, where I focused on finance, which kickstarted my career actually in the early 90s as an intern at a brokerage firm trading stocks in the Lima Stock Exchange. I guess I was exposed to the massive changes my country was going through and thought finance was the best place to ride that wave. The country was going through a massive turnaround from being a socialist country during the 70s and 80s to an open economy that was being reinset into the global financial markets, where most of the state-owned companies were privatized at that point. So the result was significant economic growth and a very high return in the local market. Large profits were made during these early years of reform. And for a period of time, actually, I thought the stock market was the easiest way to make money.
Were most of those profits realized by stock investors, or were the most of them realized by maybe some of the larger families or private owners of assets who were
Well, here I'm talking about stock investments, right?
okay.
And in any case, the euphoria of these years caught my attention and defined my long life career from that. From then on, I knew I wanted to be an investor. I thought the stock market was the best place ever. So that got me into my first full-time job at what was the first and largest investment bank in Lima, the division of corporate finance of Credicorp, the largest financial institution in Peru, actually.
Got it.
And here's where I started to understand the difference between price and value and how to solve for the latter. For a couple of years, I worked as your typical investment banking analyst, doing valuation models, PowerPoint presentation, pitches to execute M&A and capital market deals. After that, I was sent to the Miami office to work at asset management.
Miami, the capital of Latin America, I guess.
Miami, the capital of Latin America. Yes.
Right.
So this division was focused on emerging markets, equity funds, and structured products. So I spent about 2 years and a half, 3 years in Miami working there in asset management. This was it was about late 1996, I would say, right before the Asian crisis, the Russian crisis, and the fall of long-term capital in the U.S.
Yeah, but boom times in the very beginning, at least in Latin America.
Boom times until there. So if I started my career thinking that the stock market was an easy game, now I got crystal clear and developed an appreciation of the importance of price and risk appropriately. I mean, right after the Asian crisis, the Russian crisis, and long-term capital, all the things we have been talking about went south.
As you remember, I mean, I actually worked in Latin America also around that time, right? So I was working in credit risk management at Banco Santander during the 1998 crisis, and saw that all of our models turned out to be very highly correlated, and then was in Latin America. Actually, as you know, I lived in Buenos Aires, during that time. So I feel viscerally the story you're telling.
Yeah, absolutely. So I mean, this experience had an impact. It is what opened my curiosity as to what was the right analysis when trying to find the true value of companies or securities. So that's when I decided to go business school and upgrade my finance education, getting to Wharton, as you mentioned. So my interest in investing increased at Wharton, actually, which I later complemented by taking value investment courses in the Graham and Dodd Columbia Business School program.
And who better to learn, from than Graham and Dodd when it comes to valuing securities?
Absolutely, and well, that kinds of cemented my, I would say, investment ideology going forward.
And then, if I remember, you then you moved, I think, also to London as well as New York, and you were involved in a bunch of different things, including focus on metals and mining, which I guess is a particularly important if you're looking at Peru or Latin America more broadly.
Mhm.
When did you start investing not just in public equities but also in private ones?
After business school, I couldn't find a job at private equity and went back
Oh,
to
you
investment.
tried to. So right after business school, you wanted to go right into private equity.
I did, yes. I wanted to go to private equity. I wanted to go to investment, to asset management. It was quite tough at that point in time. So I ended up in investment banking.
Mm-hmm.
At this time in New York City, working for what at the time was Salomon Smith Barney, which is the former Salomon Brothers. Here, soon after starting at Salomon, September 11 happened.
Oh man.
Salomon used to have an office at the World Trade Center on Tower 7. And on that unfortunate date, my class was in the conference room on the 42nd floor. So we lived through the whole ordeal of that day.
Wow. So you had to evacuate that day. You survived, thankfully. That must have been a harrowing experience.
Absolutely.
What a sad day. Wow.
So here you have another lesson that, taught me that things can go really bad and spikes of risk are more common than you would think.
Yeah.
So, but a year after this, the dot-com bubble burst and then a period of calm until 2008. Then you had the global financial crisis. So by this time, Salomon was completely absorbed by Citigroup, which went
Right.
through a very rough period of time through the global financial crisis that you remember. You know,
No, I was a shareholder of Citigroup, so I remember. I remember all too well.
me too. Okay. So, well, anyway, so during that time, I met one of my mentors and close friends, Alberto Verme. He was the global head of investment banking at Citigroup. And he taught me a very important thing with this, which is the power of building teams and hiring better people than yourself. So I spent 3 years in London working for him in the Industrials, Metals, and Mining Group in investment banking.
Got it.
And all these events that I just mentioned shaped my appreciation for risk and ingrained doses of humility again. At this point, I start thinking seriously about moving to the buy side, where
Right.
permanent loss of capital is what defines risk and volatility. So I was looking actually to get into private market.
That's interesting. But so your view was that private markets were somehow less risky because well, tell us why. Why was that less
Well,
risky?
I mean, as opposed to less risky, you kind of evaluate the proper concept of risk, which is permanent loss of capital, and not just short-term volatility, where actually you can actually take advantage of acquiring a good company because of that, or selling a company because of that. So I really appreciate it.
You're expressing a view that with investing in the public markets is often about share price volatility as opposed to sometimes the fundamentals of investing. And you
Absolutely.
somehow thought that being in the private markets would allow you to go to the roots of true fundamental investing. Is that right?
That is right. Yes, that's precisely true. I was thinking about going to the buy side in terms of private markets. I wasn't thinking about going to Latin America again, but the opportunity to get into private markets, came that way, with an offer to go to Lima. And I thought, you know what? This is the opportunity to start learning about investing in the private markets from a great group, and then we will see.
That great group was Carlyle. Is that right?
And absolutely.
Yeah.
Absolutely. I was approached by the Carlyle Group in 2011 to help them set up and lead the Carlyle West Coast Latin America buyout fund. At that time, I was a managing director of Citigroup Investment Banking with a relatively better quality of life than what I had in the previous 10 years as a junior banker. So I was doing well.
Right.
Despite this and my wife's skepticism, as you mentioned, I decided to move back to Lima with my wife and 3 kids and left New York City to start my private equity career. Because for me, the most important thing was to start a career in the private markets, where you focus more on permanent loss of capital and you focus more on, the true
I
fundamentals
think
of
we'd like to focus on permanent gain of capital. Isn't that I think that's what we really
it.
prefer.
Yes. Well, that is correct, but investing is about, price and risk correctly.
So let's talk about your experience at Carlyle. I mean, it sounds like, per your own admission, that's really where you became a true private markets investor, where you were doing deals, but you were also, I think, running the business. You said, right? Describe that experience, what you learned, how you grew.
Yeah, well, back in Lima at Carlyle, we raised a new dedicated fund and invested the capital in 7 different industries. And we invested in Chile, Peru, and Colombia. At the time we were doing quite well at Carlyle with 85% of our commitments already invested in good companies performing relatively well and whatnot. And actually, one of the things that, I learned through the process of being at Carlyle was going through these investment committees. One of the guys I consider my mentor is Bill Conway, who throughout many of these investment committees taught me the asymmetrical relationship between risk and returns.
So for those who don't know, Bill Conway is one of the co-founders of Carlyle. He's one of the co-chairmen and is sort of credited as really being the leader of the investment team, or certainly was in those years. Right.
That is correct. Yes. And he ingrained in me, the concept of a symmetrical relationship, between risk and returns, and the fact that you can really find deals if you work hard, have the patience, and do the analysis. He also has kind of a list of common sense investment principles, which, I took them for granted and actually are pretty good. Things like, I don't know, avoid client supplier concentration, look for strong cash flow generation, be careful of government exposure, have a low execution risk business plan, keep it simple, have an industry expert, etc.
Great, simple philosophies.
Exactly. All those concepts, that I went through with all these people, and the fact that I had to, monitor and control these different companies taught me a ton about, how to invest in the private markets, I would say.
So Marco, let's talk some of these specific deals. And there's one in particular that I think of as a somewhat seminal, but maybe that's because I'm an American who lived in Latin America. When most Americans think of Peru, I think we often think about Machu Picchu and the Inca Trail. And so when I lived in Latin America, one of my highlights was when I hiked the Inca Trail. When you were at Carlyle, you guys bought the Inca Rail, right? Which was the train operator that makes it much easier for travelers to get from Cusco to Machu Picchu. I would think, while I loved that hike, it was strenuous. And so I got to believe that travelers all over the world must have been thanking you for helping them to be able to see this beauty, this magnificence of Machu Picchu without needing to do a 4-day hike in the woods. So tell us about that deal.
Yeah, sure. We did acquire 80% of Inca Rail trade. We kept the founder with a 20% stake. Actually, it has been a great business and a lot of fun to supervise that investment. What was attractive about it? I think it checked absolutely every one of Bill's, investment principles. This was an easy investment from that point of view. Okay. It was a bilateral deal that we put together. We had a great chemistry with the founder, with whom we continue to be actually really good friends. Look, I highly recommend taking the Machu Picchu branded train to get to the Machu Picchu Citadel. And for sure, a lot more comfortable than a 4-day hike. And you can even have pisco sour for free, by the way.
Well, then now you tell me. Although I wouldn't trade that hike for any. It was the first time I ever.
It's a lot of fun, actually. The hike is a lot of fun.
No, it's great. First time I ever reached 14,000 feet, and it was see the sunrise over the hills. It was beautiful. Yeah. But I think at my age now, I think the train sounds better. Well, so you ultimately, after running the Carlyle Latin America business for a while, you left, and you left to join your current group, to join Grupo Romero. So what brought you to Grupo Romero? Tell us a little bit about, the Romero family, maybe what it is that they own, very meaningful conglomerate, and the charitable group within Peru. And then tell us a little bit about also your vision, perhaps, for what you're trying to achieve on behalf of the family, on behalf of GRIO as the investment office, and GRAM as well.
What brought me to Grupo Romero, right? So in early 2017, I was approached by a leading family member to join Grupo Romero as CEO of an investment holding. At the beginning, I had my doubts about moving out of Carla, to be honest. But after several conversations with this family member, I got excited about the possibilities. Basically, a white canvas to reshape the trajectory of the group as an investment platform and allocate current capital and future permanent dividend flows. So it was like music to my ears, you know.
And when was that? When did
Uh,
you
the-
join?
that was towards the end of 2017. Took me some time because the approach was early 2017. It
Okay.
was about, I mean, give or take 8 years ago. And since then, I have been working for the fourth generation. And we are now precisely in the process of transitioning to the fifth generation.
There's now a fifth generation Grupo Romero. Tell us about the family, the Romero family perhaps, and what they've been able to achieve so far, what their goals are going forward.
Yeah, well, the fifth generation is going to take total control in 2026. Okay, so we are in the process of making the change. And the objective is to continue running the business based on the vision that GRIO has. Focus more on running the business as an investment holding company than an entrepreneurial company. I mean, you have to bear in mind one thing. For more than 130 years, Grupo Romero has been an entrepreneurial family group, that have invested and built companies in different sectors, working on those companies, building those businesses from banking, agribusiness, consumer products, port, downstream energy distribution, logistics, real estate, fishing. So a truly diversified conglomerate, but concentrated in one country, which was Peru. That was Grupo Romero when we got before GRIO.
Okay.
So what is our vision and how we prepare this for the fifth generation, that is a generation that is coming in terms of vision, of our current vision, today Grupo Romero is more of an investment holding company as opposed to an entrepreneurial group. It's focused on making objective, rational decisions. Okay. We divided the holding into three divisions, to make it easier to allocate capital under a structured framework. First, we have the public division. Second, we have the private division. And third, we have the asset management division, which we call GRAM.
Okay.
Our job at GRIO has been to manage our investment portfolio through the allocation of flows of capital coming from both dividends and divestitures. Okay? This is the way we are kind of running the business.
So, but just so I understand, so the public division is a division where you allocate that capital to public securities, at least. The private division, you allocate those same dividends, but to something different, which is private sector things. And then the third division is where you're building an asset management business, or did I get that wrong?
No, you got it right. The public division is formed by public companies that we already know, own, and control. You have a financial institution business, you have a consumer staple business, and you have a real estate business.
Right.
We are the largest shareholder in each one of them.
Each of those.
These are public companies listed in the stock market, So
in the Peruvian stock market, are all of their activities or most of their activities would still be in Peru?
the financial institution is listed in New York,
Okay.
but most of the activities are in Peru. The consumer staple business is listed in Peru and is basically food, personal care, home care. And the real estate institutions listed in Peru, and it's local real estate.
Got it.
Okay. And in each one of them, we try to steer the direction of those companies through the board, but being respectful of governance. We think of ourselves as a friendly activist investor, looking closely into potential buybacks, dividend distributions, efficiencies, M&A, carve-outs, you name it.
Yep.
Okay. That's the way we kind of monitor or steer, the companies that we control and are public. Okay.
And is it the same approach for the private companies that you
No.
control, or do you take a more active role?
I'm more active. The private division works very similar to a private equity, where we control or co-control the companies with an active role. Okay. With a big difference that we don't need to sell. Private equity, you buy a company to sell it 5 years after. Here, we own
capital, I guess you could own much longer and continue to dividend the cash flow. Is that the plan?
Yeah, exactly. And the writing here is long-term oriented, unless a buyer appears above our reservation price. And of course, we can sell it. Okay.
Yep.
We're very objective in terms of the way we run this stuff. Hence, from time to time, we buy and sell companies, and our portfolio changes based on disciplined capital allocation, of course.
But broadly, it sounds like your view, which I just heard you express, you believe that family capital does invest differently, or can invest maybe your approach is to invest family capital differently from institutions. Is that right? What are the differences between when you were investing, at Carlyle on behalf of large institutions, now you're investing on behalf of family office or large family capital? What are those differences other than flexibility on duration?
Okay. Yeah. Well, in a nutshell, the main difference with private equity, if you want, is the flexibility of having permanent capital in a volatile region. In addition, you have to bear in mind one thing, Todd, here. I mean, private equity in emerging markets is very different to that in developed markets. I mean, in emerging markets, you can rely on a 5-year period and the fact that there will be liquidity to get out of your investment at its worth or NAV.
I think that even in developed markets like the United States, there are at times different, liquidity, crunches, maybe increases to interest rates comes to mind as something that could reduce, the flexibility or increase the need for flexibility around duration. Right? I think the advantage that you're talking about for family capital to take a long-term perspective, I would argue that that's true in every asset class across the globe, not just in emerging markets, but perhaps it's more pronounced.
It's more pronounced in emerging markets for sure. A key benefit I saw in Grupo Romero, for example, was its long-term investment horizon flexibility, which in emerging markets, again, I think is more pronounced than or more important than developed ones. In LATAM, you have to remember the cycles are a lot more pronounced and
Yes.
sometimes a lot longer.
Yes.
And certain currencies are quite volatile, as you know.
Yes.
Hence, I mean, if you have permanent capital flows precisely at the right time, I mean, it's an advantage. You can get into companies or into investments at a better entry point. So I do think that that was a huge advantage, to be in a family conglomerate where you receive these flows constantly and you can make this investment in tough times and through a long period of time.
Hi, this is Todd Rich. Thank you for listening to the Declarations Podcast. We hope you're enjoying this episode. If you'd like to learn more about Declaration Partners or listen to more episodes of the Declarations Podcast, please visit our website at www.declarationpartners.com. And now, back to the episode.
As I think through some of the investments, at least the ones that I know about that you've been making on behalf of Grupo Romero in this private sector, you really seem to have been leveraging not just the long-term perspective, but maybe even some of the operating capabilities that have already been built within the portfolio of Grupo Romero's companies. And I think specifically, I guess, about the energy sector, right? I think you've bought, Colombia's largest oil pipeline. I think you bought somewhere around a third of a Guatemalan electricity distributor. You have some port projects. I mean, those seem to be associated broadly with some of the other, skill sets that were developed within Grupo Romero already. Is that right? Is that where your focus is for the private portfolio?
Actually, the acquisition of the pipeline business, as well as the electricity distribution company in Guatemala and the power generation plant in Peru, were acquisitions outside the original perimeter of business of the group. At least at that time, these were more of a opportunistic acquisitions we found at the right price and with the thesis of getting our payback through dividends in dollar-denominated currency and in a relatively short period of time. That was kind of the thesis. They have been working pretty well, actually. I mean, all these businesses were acquired by GRIO, actually. But later, we bundled them together, with the ports to create an infrastructure platform that we called InfraCorp. InfraCorp is a business inside GRIO, okay, which is run as an infrastructure fund with only one investor or LP, which is Grupo Romero. And we believe we can continue finding this non-core opportunistic infrastructure play throughout Latin America. We call it non-core opportunistic because it's not your typical infrastructure play where you're going to have, single-digit returns or anything like that.
In other words, you're seeking higher returns from more of an opportunistic approach.
Absolutely. We believe InfraCorp is a growth platform within GRIO, or we want it to be a growth platform within GRIO. And this is inside this private division I was talking to you,
Got it. So it sounds like between GRIO, including InfraCorp, and GRAM, your ambitions for deploying capital in unique ways are quite grand. So again, best of luck.
Thank you.
Let's go to the third division. What is your vision for GRAM, the asset management division?
Yeah, well, the third division, which is the asset management division called GRAM, is based out of Miami. And here we invest in two different ways. First, we invest as an LP and co-investors in private and public markets, mainly in developed geographies, to diversify the group out of Peru and Latin America.
Right.
This part is very important because, as I mentioned, in terms of the vision, this was a group that was very concentrated in one country. Very diversified in terms of the industry, but very concentrated in terms of one country. So GRAM allowed us as an LP or co-investor to diversify.
What is your plan in terms of, if you were, let's say, originally 100% allocated to Latin America, maybe even mostly to Peru? What is the vision for that allocation as you seek to diversify over time?
Well, we would like to have at least a 40% of our net worth outside Latin America.
Got it.
That's kind of a short-term objective that we have so far. Okay. Through this platform that is GRAM, as an LP and co-investor, we have partnered with several GPs and other family offices and have invested in their funds or co-invested with them. For example, actually, we have invested in the real estate business of Declaration Partners and discussed co-investment opportunities with you and your team.
For which we're very appreciative, and I think we share a lot of the philosophy around long-term thinking and all that, but we're very thankful for that partnership.
Thank you. We're pretty happy, with investment. So this is an example of what we have been doing the last few years to diversify the group outside Latin America and outside Peru, and actually our goal here is to enhance our network and create meaningful long-term relationships going forward. The second part of GRAM is that we operate as an asset manager, raising funds from other investors, including our own capital. Here, we want to act as a general partner,
And that is capital specifically from other families, or it could be institutions. What are you trying to do in GRAM or in that sector?
Well, in GRAM, we're trying to do here in this, I would say second subdivision of GRAM as an asset manager, we noticed that, it was a lot more convenient for everyone to start doing club deals,
Right.
So we start, looking for, building a pipeline of deals to do club deals. We actually just closed our first deal a few days ago, with third-party capital.
What sort of deal? Tell us about this deal that you just closed.
Well, this is a financial institutions business, a service business. It's based out of Miami. It's expanding to the north of Florida and Texas, and we have partnered with the founders where we have acquired 70% of the business control. We see it growing into the north of Florida. You have, they are the leaders in Miami that, based on the platform that they have, they can easily take over the market of Orlando, Jacksonville, Tampa, and they have already opened offices in Texas, which is growing pretty nicely. So Texas is a white canvas for the company. I think that that growth, there is going to be substantial too.
Well, wish you all the best, obviously, with that business and with the broader GRAM efforts.
We're pretty happy so far. So, first innings, of course.
A couple of days, yeah. So hopefully you're still happy. But maybe one of the things that I know you've talked about with me, and I think pretty interesting, is one of your big moves with GRAM was actually to acquire the Carlyle Latin America business that you used to run, and so it sort of helped give you, I think, a bit of a platform to sort of expand beyond, just the Romero family capital, but to sort of have a team and a vision and the capability to then, do what you're talking about, which is to raise outside capital, invest outside capital as a fiduciary. One of the things I think you wanted to do with that capital is to focus specifically not just on Latin America, where historically, as you said, you've been active, but also on the U.S. Latino or Hispanic market. So talk about that. What's the opportunity that you see there? And perhaps this deal is related, but what's the opportunity in the U.S. Latino sector?
Sure. Yes. this actually goes back to the fund I was telling you that we were, thinking about raising and now club deals that we are putting together. The way we see this is the U.S. Hispanic economy is actually a 3.4 trillion economy within the U.S., and has been growing faster than India during the last 10 years at a rate higher than 6% per year, give or take. Wow. So, the way we think of it is as one of the fastest emerging markets in the world, and happens to be in the U.S., under the U.S. rule of law, with a dollar as functional currency, U.S. infrastructure, and, is even underfunded from a private equity point of view. So what we found here is an opportunity, a niche, if you combine actually the U.S. Hispanic economy together with the Latin American Hispanic economy, then it surpasses $6 trillion. So the whole thing it's a very big place where you can deploy capital, you know? So in terms of Carlyle and the fund we acquired, we did acquire the Carlyle fund focused on the West Coast of Latin America. This was the fund that I helped raise and led in years, as you know. The combination with Graham was a seamless one. Remember, it was my previous team at Carlyle with the same investment philosophy.
Yep.
But we rename our GP as Graham ABF, America's Buyout Fund, and have refocused the team into a new approach, aiming the U.S. Hispanic middle market for the reasons I just mentioned.
Yep. Got it. So you've been able to put together the same team that you already worked with. So back to your first point, your declaration about working with people who you think are great and capable. You put together that same team with their capabilities. You've now bolstered that with Romero Family Capital and the capabilities that GRIO already had and built. And you're focusing, in addition, on a new market, a large, fast-growing market under U.S. rule of law, U.S. currency. It sounds like a recipe for success. Wish you the best of luck there.
Well, we completely agree with you. That's where we are aiming for.
One of the things that, as a student of Latin America, one of the things that always really impressed me about Grupo Romero and maybe the Romero family in particular has been their long-standing dedication to responsible growth. I think that there's environmental sustainability. There's the broad support of social development within Peru and economic development within Peru. Tell us a little bit about, sort of beyond the business side, a little bit about, sort of Grupo Romero's charitable pursuits and why it's so important to the legacy of the company.
Yeah, well, look, Fundación Romero is focused on giving education for people in need, as well as giving practical help in times of national crisis. I mean, such as, for example, the COVID pandemic or inundations or landslides, which actually are pretty common in the northern part of Peru,
Wow.
And but this is run separately from GRIO, has its own dedicated CEO. And actually, this is something that is led by the chairman of the group, which is a family member, of course.
Right.
And here, GRIO's responsibility is to fund the foundation. So I just have to make sure.
So your responsibility is a for-profit investment firm, but some of the profits go to benefit these charitable purposes. Is that right?
That is right. Yes. I just have to make sure that they are properly funded, for what they need.
It's I one of the things that I find so fascinating as I have these conversations is how many of the families with whom we interact, the family investors, have that same approach, right? Focus their investing side to, if they can, as high risk adjusted returns, but then utilize those proceeds not just to further enrich themselves, but also for the benefit of the society in which they engage. So that was fascinating to talk about maybe the Romero family, Fundación Romero, and what they do on the charitable side. What about you personally?
I mean, I do similar stuff to what, Grupo Romero is making in terms of education. I contribute to, people in need in my country in terms of education through different foundations. And I try to be present at some of the, gatherings and whatnot. So that's kind of my way of giving back. I truly believe that education is the best way for emerging countries to get out of poverty.
It's a worthy goal. I love that. Maybe on your personal life, let's spend a minute there. So many of us in the business world really know you as a cosmopolitan. I mean, you've lived in New York and London and Miami and Lima, and you love international travel. As I've gotten to know, I think your real passion is probably just to be outdoors, right? It's sort of simple and humble, back to your roots on the farm. Is that right? What do you do to unwind?
Well, look, yeah, I do love nature. Probably due to my upbringing, I like to be around dogs and horses, which I'm familiar with. When I need to de-stress, actually, I still go for a weekend to my house on the farm and relax. As I mentioned, I still have it, and without all that noise, I can think a lot better, help me focus and come up with new ideas. Probably the best ideas come from when you're in the best place to relax. Besides going to my farm, I also unwind pretty nicely in my once-a-year family ski trip. I've been doing it for a long time.
Where do you go?
Well, I normally go to Colorado. I'm planning next year to start going to Europe. But I've been going to Colorado for many years, and I enjoy every minute of it. Different places in Colorado, Utah too. I've been to Utah a couple of times. So there are very few things you can do with the whole family at the same time where everyone is enjoying it. It strengthens the bond while having fun. So I love it.
I'm a huge fan of skiing. And one of the things that I love about my Latin America experience is that you ski at a different time of year. So you could ski Colorado in the US winter, and you could ski Mendoza or Portillo or something in the, in the Latin America winter. It's fantastic. Um, let's go maybe to some of our standard closing questions.
Mm-hmm.
So what is a book that most influenced your thinking or your personal development?
Well, look, back in the mid-90s, before being transferred to Credit Corp's asset management office in Miami, as you might remember, I bought the Warren Buffett Way book from Robert Hangstrom.
Oh, fantastic.
Yeah, that was a stepping stone to other books in the same line of investing for me. It did anchor my way of thinking about value, so I always remember that book.
What is the best advice that you've received from your parents or that you give to your own kids?
Yeah, well, actually, the best advice came from my grandfather, I think. He taught me many principles, such as the value of strong ethics, humility, among others. But the ones that he repeated the most were around the fact that there are no shortcuts to success. And those revolve around hard work, resilience, and the ability to listen. And from that, I do believe that resilience is the most important skill to succeed in life. I think I mentioned that at the beginning.
Yep.
That never trade off morals or ethics to succeed. And this is the advice I give my kids. Resilience through time is, very important.
Great. Now, in the U.S., we celebrate the Declaration of Independence, which talks about freedom for life, liberty, and the pursuit of happiness. What do you do in pursuit of happiness?
Well, my family is my source of happiness, to be honest. I work hard to keep them safe and healthy in every respect.
That's great. Throughout this conversation, Marco, you continue to highlight the things that I always suspected you would, based on my, our friendship, which is humility, hard work, ethics, love for family, and obviously the professional joy you get from long-term investing. This has been a fantastic conversation. I'm so happy that you joined me here. Muchas gracias. Un abrazo fuerte. Thank you so much for joining.
Thank you, Todd. Abrazo.
This podcast is provided for discussion and informational purposes only, for use by Declaration Partners LP, together with its affiliates, referred to as Declaration or We. This information discussed in this podcast may change at any time without notice, and there is no duty by Declaration to update any person to whom this information is provided. This podcast does not constitute an offer to sell or the solicitation of an offer to purchase any investment product or any interest in the fund or any other investment vehicles or accounts managed or advised by Declaration, a Declaration investment product, in any jurisdiction to any person. Any such offer or solicitation for interest in any Declaration investment product will only be made pursuant to such Declaration investment products' definitive offering documents, which contain a description of the material terms, including risk factors, conflicts of interest, fees and charges, and regulatory and tax considerations relating to such Declaration investment product, and which should be reviewed carefully by potential investors prior to making an investment decision. This podcast does not constitute tax or legal advice. The listener is urged to consult a professional tax and/or legal advisors regarding the possible tax, legal, economic, regulatory, or other risks and consequences associated with any investment, and must be able to bear the risks involved. This podcast may contain certain forward-looking statements, which constitute Declaration's views with respect to future events, which can be identified by the use of forward-looking terminology such as intend, seek, expect, target, project, or endeavor. These statements are made based upon such views as they exist as of the date herein. There's no assurance that these such views are correct or will prove with the passage of time to be correct. Actual events or results may differ materially from those contemplated by such forward-looking statements as a result of factors beyond Declaration's control, including, without limitation, any disruptions in global, regional, or local financial, credit, or real estate markets, acts of God, fire, hurricanes, tropical storms, floods, earthquakes, or other natural disasters, outbreaks of an infectious disease, pandemic, or any other serious public health concern, war, terrorism, labor strikes, electricity shortages, or other national or local emergencies, or any combination of the foregoing. David M. Rubenstein is an anchor investor in Declaration Partners Real Estate Fund II and is not an employee of Declaration. Neither the U.S. Securities and Exchange Commission nor the Securities Regulatory Authority of any state or other jurisdiction has passed upon the accuracy or adequacy of this podcast. No compensation has been awarded to any speaker for statements made that are either testimonials or endorsements. However, certain speakers may be current or former investors in certain Declaration investment products and may receive reduced fees, priority terms, priority access, co-investment rates, among other preferential treatment, which may pose a conflict of interest. All statements made on the podcast are the opinions and beliefs of the speaker and may not necessarily represent the opinions, beliefs, and position of Declaration. Consequently, from the foregoing, no reliance whatsoever should be placed on this podcast, and no decision, including any investment decision, should be made based on this podcast or on the information contained herein. Podcast prepared as of September 5th, 2024.